It's somewhat counterintuitive that the yen has been on a weakening trend.
Not necessarily, because you have to understand what it is that they actually did throughout the course of this week. It's not just the fact that you had this ultra easy monetary policy supposedly ending, shifting the needle when it came to negative rates, the YCC and everything else. But realistically, have they ended YCC for starters when they're still going to be engaging in bond purchasing? QE is very much alive and well in Japan. That 6 trillion yen is obviously going to be to ring fence rates. But there was something that they did specifically that they announced on Monday that is in operation yesterday and will be in operation on Thursday. It's Gensaki. So they engaged in around about a 3 trillion yen reverse repo operation. It had massive take-up. And that ring-fenced the movements that you would see in terms of the yields, which is why you didn't see a spike in the yields yesterday on the back of all of this. And because of the yield differential, because of the fact that you have those US Treasury yields crawling higher, and all of the short position that you do have on the yen was always going to get weaker on the back of any kind of decision they made unless they completely surprise. And what I would also be mindful of, because we heard Ueda-san and he had a lot to say about probably the state of the economy, his expectations that, they're realistically almost at that price target and everything else. There was some devil in the details when you look through their outlook report, this expectation, for example, that they're going to be, edging back towards a positive output gap. And they've been saying this and hoping this for quite some time. But then you have to ask yourself, guys, how do you get a positive output gap in Japan when the big firms are doing great, the small firms aren't, and they're cutting back on productivity in order to, compete with these firms that can pay higher wages? Where's that productivity going to come from? Where's this expectation, especially in an era where you're having to pay higher wages now because you're getting pressured to pay higher wages, and that's basically, destroying your cost base. So where's this productivity coming from?
Maybe AI, I don't know, but it's not going to happen overnight. But Will, I'm really curious. Tactically, the way they timed it, right? And you've been thinking and talking about this as well, right? This is the day before, kind of convenient, right? A public holiday, vernal equinox, when markets are not trading. 1, 2, as Ueda was speaking, very unusually, the finance minister Suzuki was speaking at the same time. So in the past, right, when they've tried to do yen-tervention, it's always been, okay, BOJ governor, please have your turn. After that, then MOF will have their say. This happened at the same time. This is like, during the Super Bowl, a network decides to debut a new show or a new series. It's unheard of. What's going on there, do you think?
And you know what? I would even go a little bit further in terms of everything that the BOJ is doing, because, a lot of people have started talking about this carry trade, it blowing up, and the prospect, then they're going to, interfere on the yen, or even the yen will begin to strengthen, and you will blow up the carry trade as rates crawl higher at the same time. I would unequivocally suggest that they're going to do no such thing. And I would even go further as to suggest that it's very likely they're going to be staying firm for as long as possible, because you have to understand the implications. It's not just a case of people saying, okay, I want to go borrow in Japan and get it at an ultra low rate and then clip maybe 3 and 4% on the back of buying US Treasury yield. It's not as simple as that. We're not talking about these simple strategies that, were in operation maybe 30 years ago. We're talking about probably a vast majority of the derivative structure around the world, everyone borrowing money on the ultra cheap in Japan in order to fund their macro strategies, people utilizing that cheap lending because you're getting a far better yield if you're, trying to lever up your 50 million to 500 million to then speculate on assets.
Would you agree,
they won't blow that up. They won't.
Would you agree, though, Will, that a really meaningful normalisation move could come later on this year around October? I mean, granted, as you quite rightly pointed out, QE program's still alive and well. So this is really normalisation, very, very light, super light normalisation. They're still in the game in many ways.
Yeah, so will they engage in any kind of QT? No. Pretty much, I would argue that it's very difficult for them to do so, considering the implications that would have and what that would do to rates, because they've suggested they're going to continue on with QE. Are they going to stop QE? No. Are they going to intervene on the yen significantly? I would argue no as well. So if all of those conditions are present, what would be their justification for moving, considering, they talk about wages, they talk about consumption. Consumption's in an absolute hole unless it's international people coming into Japan. And they will not blow up the carry trade, because what happens to the Mag 7? What happens to all these assets that have been absolutely rip-roaring on the back of everyone being able to scoop up leverage and invest in these assets? That's what they're scared of. That's what everyone's scared of. They cannot.
Are they going to taper buying of U.S. Treasuries?
Have they been engaging in a lot of different strategies, and I've been saying this for the past 2 years. You just have to look at the Japan Open when you're looking at T-bills and the liquidation that goes on and some of the things that might be in play there. But I highly doubt if you're taking on collateral for a lot of this market action levered positions that you kind of need to have those USTs as collateral for the basis of that action as well. And, they're buying up all these assets around the world. And yeah, there's a lot that can be said, but realistically, I see no foreseeable way that they're going to be, tightening the screws anytime soon.
Okay.